Okay, you're good to go.
All right, wonderful. Good morning, everyone. Welcome to the August 8th, 2024 meeting of the Connecticut Paid Leave Board of Directors. I would like to call the meeting to order. It is 9:01 on my computer. Amber, would you kindly take attendance?
Yes, thank you, Fran. All right, Ava Bermuda Zimmerman.
Present.
Isha Canada will not be joining us today. Adrienne Cochran. I will circle back. I don't think she's had a chance to join us yet. Andrea Comer.
Present.
Good morning, Andrea. Sheila Hummel.
Present.
Ellen McKitterick.
Present.
Fran Pastore.
Present.
Alice Pritchard.
Present.
David Salazar Austin.
Present.
John Scott.
I'm here.
Mike Soltis.
Here.
Molly Weston Williamson.
Present.
Holly Williams.
Present.
Janae Woods Weber.
Present.
Justin Zartman. I don't think Justin has joined us yet, and I just want to circle back. Has Adrienne joined us yet? Adrienne Cochran? Not yet. All right, thank you. We do have a quorum.
Thank you, Amber. Okay, and thanks to the many members of the public who are joining us today. I don't see any members of the legislature in attendance. Okay, first item on the agenda is, second item on the agenda, I'd like to ask for a review of the July 11th, 2024 meeting minutes. Are there any corrections or any discussion?
Motion to approve the minutes. Second.
John, may I have a second?
Second.
All in
Okay.
favor?
Aye.
All in
Aye.
favor?
Aye.
Any opposed? Any abstentions? That's me, Fran, abstaining.
And me,
And-
Molly, as well.
And Holly
Thanks,
Williams.
Molly. And Holly. Molly, Fran, and Holly. Okay, I believe the motion carries. Thanks, everyone. We'll move on to Harinda, and would you kindly provide the presentation of the annual actuarial analysis?
Hi, everyone. Good morning. I'm going to share my screen now and get started on my part of the presentation.
You're all set to share, Harindra.
Thank you. Confirm that you can see my screen, please.
Yes.
Great, thank you. Okay, so the purpose of today's presentation from our team is to talk about the annual reporting that we do every year. Shows the fifth fiscal year results that for the full year that ends June 30th, 2024. So this is the 12-month period. And this is sort of an annual analysis and reporting on that. In conjunction with that, we also provide a 3-year projection of the projected financial activity and fund balance. So that's also included in this presentation. So I'll be talking about the first part in terms of the reporting year to date, or the annual reporting first, and then the projection as well. So this page provides a summary of the results. Overall, the results in the sort of middle column here are the actual reported results, labeled as preliminary. To the extent that any of the numbers that have been reported changed, they'll be finalized shortly. But based on everything we have to date, overall, the fund balance at the beginning of the period was 557.2 million. So this is as of July 1st, 2023. Net activity was 71.5 million, and the ending fund balance is 628.7 million. That compares to a previously projected ending fund balance of 633.5 million. A little under 1% difference between those two numbers. Overall, the net activity for the year is based on 462.9 million of contributions earned, which is slightly higher than the numbers we had previously. Investment income, 29.2 million, also slightly higher than what we had previously. Incurred claims are also greater though. So 380.8 million compared to the projected of 370.7 million. That's reflected, and we have seen greater claims activity particularly in the last month or two. And then other expenses, 39.8 million, just under what was projected before. So overall, that adds up to 71.5 million in terms of net activity. To income items, the contributions and the investment income, and kind of the cost for the program, the claims, and of course, any other expenses as well. So adds up to 71.5 million, and that's how we get from 557.2 million to 628.7 million. In our assessment, the fund balance of 628.7 million is strong. It's a healthy fund balance. And based on the funding metrics that were established, the fund balance fund position meets those metrics. So continues to be a strong fund balance position based on what we have seen so far. This next page provides a graphical illustration of the same results that I shared previously. And revenue in total, which is the contributions plus the investment income, 492.1 million. Our expenses, 420.6 million to claims and other expenses. That takes us from a starting fund balance of 557.2 million to an ending fund balance of 628.7 million. The previous numbers are shown on the right. I'm going to spend any time on this page. This page provides the detail. It's shared as part of the presentation material, and to the extent there are any questions, I'll be happy to answer that as well. But this provides all the detail supporting the prior numbers that were summarized and discussed. This item here provides the reserve estimate, which is included within the results provided previously. This is a reserve for outstanding claims that's made up of a case reserve. This is reserved for approved claims that still have time to go. So they still have outstanding payments remaining. Pending reserve, that's claims that are pending, so they haven't been adjudicated yet. They may be approved and result in payment, and result in incurred claims that have not yet been reported. In total, the total reserve as of June 30th was estimated to be 53.7 million. Made up of these three components, with the case reserves being the largest item in making up this total at 27.9 million. Okay. Then I'll move on to the projection for the fiscal years. This is the 3-year projection for fiscal years 2025, 26, and 27. I'll start off by showing this summary exhibit. The first set of numbers here are the same as what you saw before. So that's for the fiscal year ending June 30th, 2024. And then the next 3 columns provide the projection for the next 3 years. So overall, we see that the fund balance starts off at 557.2 million, ends at 628.7 million. That's for this period that just ended. Over the next 3 years, what we see is net activity, 34.5 million projected for 2025, 19.1 million projected for 2026, and 10.3 million projected for 2027. So overall, for the next 3 years, the current projection shows an increase, a small increase from 628.7 million up to 692.6 million over the next 3 years. We are continuing to monitor and update these assumptions and everything else that's driving the analysis. We're also looking at a number of other scenarios. And we're in particular also looking at 10-year projections as well. So all of that we are looking at, and we're providing more further analysis as well. That's to follow. Move on to the next page. This page provides, similar to the annual results, this page provides detail behind the 3-year projection that was shared. We've been providing this exhibit as well, which shows a graphical illustration of the results that I just shared, and showing the fund balance, primarily as increasing from 628.7 million at the end of fiscal year 2024 up to 692.6 million at the end of fiscal year 2027. And this is one scenario based on all of our analysis. Actual will vary, and we'll continue to update and monitor and also look at alternate scenarios. I'll summarize my prepared comments. Few key items here. So net activity, just to reiterate, was 71.5 million over the fiscal year 2024, to the period July 2023 through to June 2024. As a result, fund balance is 628.7 million. And when we look at that fund balance, we see that it is healthy and it meets the target funding metrics that we had established early on. The fund is expected to increase over the next 3 years as projected revenue is greater than anticipated expenses for the next 3 years. And because we are seeing increased experience and we've reflected that in the projections, we want to continue to monitor that. And we're preparing updated 10-year projections and looking at different scenarios to see what impact that might have on the fund balance and the contribution rate recommendations as well. With that, I'll open it up for questions.
Thanks, Verinda. Any questions, anybody? Any observations? So I'd like to just comment that it looks like we have more benefits, more people that are participating in the program, which is really the goal and it's what we want. So that makes sense right now at first glance. You know, I know you're doing a deeper dive, Verinda, but what you're saying makes perfect sense. So thanks for the detailed report. Anybody else? Okay. Great, that's a nice segue into item 4. Erin, would you kindly lead us in the discussion regarding the contribution rate policy posted in the Connecticut Law Journal?
Certainly. So let me get this slide where I summarize the comments. I can share that. So as you all may recall, in June at the board meeting, we shared the draft contribution rate setting policy that had been developed over several months with lots of work from finance and from policy and personnel. We posted that draft policy in the Connecticut Law Journal with 30 days for comments. We also posted it on our website and shared it with our list of stakeholders and partners. And we did receive 2 comments, one from the Connecticut Legal Services Programs, sort of on behalf of Greater Hartford, Connecticut Legal Services, and New Haven Legal Assistance. They really wanted to reiterate that the program is an important benefit for their clients and sort of urged us to make sure that we don't do anything to jeopardize the current benefit levels. They also encouraged us to consider the adequacy and calculation of current benefit levels as part of our assessment. Understanding that we can't raise the current benefit levels on our own, that's a legislative change, but they still thought we should include some understanding of whether we think those benefit levels are appropriate. But also just to make sure that we're thinking about the long-term health of the trust fund. We also received a comment from the Insurance Association of Connecticut on behalf of a member, which pointed us to looking at other paid leave programs like Washington and Massachusetts, and sort of reminded us to be aware that we should expect growth in our utilization over time as we become more mature, and the importance of being prepared for uncertain events. So we did share this with Policy and Personnel on Tuesday, and the Policy and Personnel Committee appreciated these comments, but didn't feel that it necessarily required us to change the language of the policy. Let me just pull up the language of the policy we have now so that everyone can assess whether they agree with that. And then we can, I'm happy to take any questions or discussion. I just have to get to the policy on my screen that has far too many things open. Hold on. There it is. Make that a little bit bigger for everybody. So this is what we have right now. Just so everyone is aware, with the recognition that we want to begin making the discussion in the summer of every year, no later than June, and identifying various factors we should consider. So happy to stop talking and let the board discuss whether they think this is sufficient or whether we should make any changes based on the comments we received.
Erin, thank you.
It thinks like Molly raised her hand.
Thank you. So I just wanted to note that the two comments that we received are from two entities we wouldn't necessarily expect to agree with one another. And so the fact that they came to quite similar conclusions, I think, is telling. My perspective is particularly because the factors we consider already include the sort of any other factors that we consider relevant. I think the current language is sufficient. I don't think we need to change, even though I think all of the things that were noted in the comments are appropriate things to consider. But I think the current language already allows us to do that, and I think it is likely that we should do so anyway. So I don't think we need a change in the language. So the comments are very well taken.
Thank you, Molly.
Thanks, Molly. I'm having some IT issues. I don't know why this morning, but I can't see other hands raised, so my apologies. Erin, if you can, with the document open, I'm having trouble seeing other hands.
So am I. So if anyone does want to speak out, just sing on out.
Jump in. Okay. Is there any additional information? Oh, sorry. Is that John?
I just wanted to,
Okay.
Molly's observations are pretty much what the Personnel and Policy Committee discussed, that all the issues raised were certainly appropriate, certainly valid concerns, but already embodied in the fairly broad language we have. So I just wanted to let the board know that the committee kind of came to the same conclusion.
Thank you, Mike. Yeah, there's everybody. And Amber, I see Adrian now, just FYI. Hi, Adrian, good morning. Okay, so are we ready to proceed with the vote, or is there any additional information anybody would like the team to gather before we vote on this, on the contribution rate?
On the contribution rate policy.
On the contribution rate policy, thank you. Okay, so may I have a motion regarding the contribution rate policy?
What's the motion? What are we motioning on?
To adopt the contribution rate policy.
Thank you.
I'll
May
make
I have a
to adopt the
motion?
policy.
Thank you, John. A second?
Second.
All in favor?
Aye.
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 Any opposed? Any abstentions? Okay, the motion carries. Thanks, everyone. Erin, back to you. Would you please lead us in the discussion regarding the proposed revisions to the consolidated policies?
Sure. So let me share my screen again. So changing directions slightly. This is a request. Well, we want to summarize the proposed consolidated policies and ask the board for permission to post the notice of proposed changes to the Connecticut Law Journal. So we're not adopting anything on the consolidated policies today. We just want to get moving on making some changes. The first set of changes are because Public Act 24-5 made some changes to our program, and we need to update the policy language to reflect those legislative changes because this statutes trump policy. So now that we have a new definition by statute for municipalities, we can take it out of the policy. We also want to acknowledge the statutory language that allows tribal employers to engage with the program through an MOU. We also want to reference the other changes in the statute that relates to other income replacement benefits, the expansion of the family violence leave to include sexual assault, which prompts a change to calling the whole thing safe leave, which is what other states call it already. And kind of reference what we have with regard to the ability to charge interest for failure to comply with an overpayment recovery plan. It's just part and parcel of our cleaning up. And then finally, even though we have a new definition of municipality, public libraries still can fit under two different categories, either municipal libraries or associational libraries. So even though we got rid of the test to determine if something is a municipality, we thought it made sense to adopt the categories that libraries already use and incorporate that in our policy language. Additionally, we just want to reflect some of the other programs and operational changes that we like to make. Now that the fund recovery for employers that provide zero money to us is well underway, we are beginning the process of figuring out how to do audits of contributions to make sure that the money we do get in from employers is the correct amount of money. So similar to our private plan audits, we just wanted to bolster that with some policy language and just sort of clean up kind of what happens with penalties. We also wanted to recognize that there's still possible for municipalities and boards of educations to collectively bargain in. Just wanted to be really, really clear about the timelines and make sure that everybody knows they cannot join us retrospectively. It's not the way insurance works. We have a couple of claims related items that we think will just streamline the process a little bit. First, with regard to work schedule and employer provided benefits. We don't pay people based on their current wages, as you all know. We pay them based on their highest 2 quarters in the base period. So we really look at their past, which may be from different employers. And we also have folks who might work multiple jobs. So we do have to create a composite work schedule for some folks who don't have a standard 40-hour week. And so we wanted to be able to specify that, look, if you are someone who is applying to us who's no longer currently employed, but in that 12-week sort of trailing period, we'll use your schedule from when you were employed. We can create an alternative reasonable schedule if we have to kind of craft together a composite schedule. We may have to ask non-participating employers to give us some information for those folks who have multiple employers. So that's all on the sort of schedule piece. Then we also wanted to reflect in our policies that there may be separate intervening events where you're not working, but it's not because you're taking leave. You might have a qualifying condition, but the qualifying condition is not the reason you're not working. You might not be working because you're on jury duty, or you are serving in the military, or you are incarcerated. We shouldn't be paying benefits in those situations because you're not working for those other reasons. And so we just want to be explicit about that. And finally, when we first adopted this policy, we had followed what we had understood to be the DOL policy regarding unemployment insurance that says if you are receiving severance payments that required a release of claims, the severance payments are really consideration and not necessarily straight wages. We now understand that that's not how DOL handles UI. So we want to still be consistent. So we're saying that severance payments would be included in the calculation of wages, both for purposes of determining eligibility and setting the benefit rate if you receive those severance payments in the base period, but also for understanding if there's an employer provided benefit that you're receiving right now that would be taken into consideration when we determine if you're receiving more than 100% of your wages. And then there's pregnancy and bonding. So again, when we first started, we recognized that under FMLA, an employer cannot prevent an eligible employee from taking block leave for intermittent or reduced schedule bonding. That's straight up FMLA. But FMLA also says that if the employee wants to take bonding leave on an intermittent or reduced schedule basis, the employer must agree to it, and the employee and the employer set that schedule themselves. In our employment verification form, we kind of wanted to highlight that so that employers knew about that. And so on our form, we have a section where we say, if this is intermittent or reduced schedule, we want sort of an extra affirmation from the employer that they've agreed to this. We were hoping to be sort of extra in terms of educating, but instead we've caused confusion. People fill out the form, that section of the form, when they don't need to. It's not helpful, and it's sort of an unnecessary use of pretty valuable space on the form. So we're saying we think we could drop that requirement. Not changing FMLA in any way, just changing what we ask. We do still need to know about the date of birth for bonding. We've streamlined the childbirth bonding application process, but for our own records and potentially depending on what the IRS and the Department of Treasury issue with regard to tax guidance, knowing the date of birth and knowing when childbirth recovery benefits switch over into bonding benefits may be important. And so we still need to get that information. But because we still want to streamline and we don't want to go back, we sort of reinforce in the policy that when there's no break, we don't change the benefit calc or rerun the eligibility. A couple other form related things. There is a Department of Public Health Acknowledgement of Parentage form that people will fill out. It's actually something you fill out that helps you get a birth certificate. Folks who want to submit their documentation to us before they get the birth certificate, because that can take a few weeks, often ask to give us that acknowledgement form, and we want to be able to accept it. And finally, we had always created sort of our own form for documentation of parental relationship, but originally we called it certification of birth. I don't really know why we didn't realize that causes confusion. And people think it means birth certificate, and it didn't. It was our own form, so we just want to change the name, but that is referenced in the policy, so we have to change the policy. And we just have some general cleanup and getting rid of some policy language that we never really enforced, like waiting periods for new employers. And also acknowledging that there are situations where we can't do the 5-day eligibility review because we need clarification about the wage information. Most of the time we get that through the DOL, but sometimes we need additional information. And so we just want to keep that clear in our policy. So we did share the full policy document with everyone. We have shared it with policy and personnel. They were kind of good with it, if that helps you feel comfortable about our process. And we just really want to get this out to the public for public comment. Of course, any board members that want to take more time to review and give us your comments directly, you had have that time as well.
Thanks, Erin. I don't see any hands up. Does anybody have any comments or questions for Erin? Okay. May I have a motion to authorize the authority to post the notice of proposed revisions to the consolidated policies in the Connecticut Law Journal for public comment?
So moved.
Thank
Second.
you. Thank you. All in favor?
Aye.
Aye.
Any opposed?
Aye.
Any abstentions?
Fran, I think we skipped over the discussion about the contribution rate itself. So we should go back.
Oh, I'm so sorry. Okay, let's go back.
Okay. So sorry about diverting everyone, because we had a nice little path from the actuary report to the policy for adopting the contribution rate. We wanted to give the board an opportunity to discuss the contribution rate right now. So as you know, current rate is 0.5%. It cannot go above 0.5% by statute. The board has the authority to decide if they want to reduce it. We have talked about the factors that we would take into consideration if that were ever to go into effect and you adopted that policy. during the spring, we did anticipate that our trend of having sort of a pretty high amount of income compared to expenses would continue the way it's been for the past couple of years, where we have kind of a good amount of money. And looking forward to the next 10 years, we adopted sort of a calculation based on the factors that we adopted that said, if you have enough money at the end of the 10 years to account for all of your expenses and additional money that would account for sort of the in case of emergency break glass, and you still had more than enough of that, then maybe it would make sense to reduce the contribution rate. If anyone wants to see that math, we can share that. But as we shared in last month's board meeting, and as Harindra shared with our actuarial report this morning, our claims are going up, and we are maturing faster than we had originally anticipated. We are having $8 million weeks in terms of benefit payouts regularly now that we did not have before. And we're not seeing the 10-year look to include that level of kind of cushion that we had thought perhaps we might see. And so from our perspective on the staff level, if we're not seeing that cushion, we don't think it makes sense to reduce the contribution rate. But it's not our decision, it is the board's decision. So we wanted to give you all the opportunity to let us know what you think and to let us know if there's any additional information that you would like before making the contribution rate decision for 2025.
Bethany seems to have her hand up.
Well, thank you.
Sorry, that was my mouse.
Okay, I'm not seeing any hands.
I don't see it. I don't see a hand.
This is Holly Williams. I had one quick thing that I just wanted to confirm. I know in the past that the actuarial analysis has been accompanied with a sensitivity analysis that shows, 1 or 2% swing in benefit payments plus or minus. And so is the board going to be receiving that as kind of step 2 in the actuarial deliverables for this plan year? And then my second question is, I know that comments with regards to the contribution rate and other analysis of the plan centered around the value of the benefit relative to lifetime contribution.
Oh, we lost her.
Here she's back.
So I was just curious if the analysis would look at, benefit tweaks as well relative to contributions received.
So Holly, we lost you for a moment in the middle. I think you were asking about comparison of contributions, like for an average individual, how much would they be paying in contributions compared to what they could receive in benefits? Is that what you're asking for?
Yes,
Okay.
thank you.
So we can absolutely pull those together and share that with you all before the next board meeting. Is there any other information that you as board members would like to receive before you make a decision about the 25 contribution rate? Okay.
Okay.
So I'm assuming, since we want to give you more information before you decide, we can we'll do
Postpone.
that and then just raise it again next month.
Okay. Sounds good. Thank you. So are we going back to item 6? We already
Yes.
voted.
Yeah.
Okay. Okay. So do we need to take another vote on that?
Nope, I don't
No.
think so.
So then we can move right along to Dave. Okay.
Yes.
Thanks, everyone. Dave, would you please lead us in the discussion of the proposed revisions to the finance and accounting policies?
Yes, thank you. Good morning, everybody.
You can see your screen, Dave.
Thank you. Okay, so annually, we take a look at our finance and accounting policies and update them as appropriate. Not that many changes this year. The more significant ones were as a result of the legislative changes that Erin referenced before. The authority's annual report is now due on September 1st as a result of that change. So we had the policy reflect that date change. Another significant change was as a result of our credit card expenses are now approved in bill spend and expense platform, which we adopted this year. And my thanks to Shelley Matias for leading that endeavor, because as a result of that, bill spend and expense now has an automated workflow for approvals documentation, and it syncs with QuickBooks. So as a result, there's no need any longer for a manual journal entry. So we had the policy to reflect that. Other clarifications in the policy included that the financial statements, the annual audited financial statements, are presented to the board. They're not actually approved by the board, so we wanted the policy to reflect that reality. Another item was we had previously updated the policy for the paid leaves administrative fee. Originally, it was envisioned the administrative fee would be a percentage of contributions. But as the finance policy pointed out, contributions can be quite variable, whereas the expenses for the authority tend to be more fixed. So it made more sense for the administrative fee to be a fixed amount based on expense history, which was adopted. What wasn't updated in the policy was a reconciliation of the fee, which was now moot because it wasn't being done as a percentage of contributions anymore. So there was no need to reconcile the budgeted to the actual because it was a flat fee. And besides, the administrative fee is reported on the monthly financials, and the budget to actual is reported there, as you probably well know from my financial updates every month. So we updated the policy for that. And then there's some other minor updates. We formatted the document to make it look a little cleaner. My thanks to Liliana Andujar for doing that. We clarified certain financial abbreviations like GAAP and GASB and things like that, defining them. The annual operating budget, the internal schedule was updated to agree with the plan of operations, whose deadlines have been previously updated. And last, we updated our journal entry template because we're consistently updating and fine-tuning that. So we wanted the latest and greatest to be in the finance policy. So those are the updates we made to the finance policy. I'm happy to take any questions on it at this time.
Any questions or comments for Dave?
Looks like Molly has her hand raised.
Yeah, I just had a quick question. So just to clarify, well, in previous years, we've gotten the annual report more like in July with the change in deadline. If it's due September 1st, it'll be coming out in the next couple of weeks. Is that right?
Yes, that is correct. Yes.
Thanks, Molly. Anyone else? Thank you, Dave. Okay, so we'll move ahead with a motion to authorize the authority to post a notice of proposed revisions to the finance and accounting policies in the Connecticut Law Journal for public comment.
So moved.
May I have a motion? Thank
I'll
you.
second that.
May I have a second? Thank you. All in favor?
Aye.
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 Thank you. Any opposed? Any abstentions? Thank you all. The motion carries. We're moving on to the committee reports this morning. Mike, you're up. would you please provide policy and personnel report?
Sure, good morning. Our committee met this month and we discussed the proposed revisions to the 3 policies that the board has voted on today. So that was the extent of our meeting. Thank you, Fran.
Thank you, Mike. That was easy. Okay.
You cut out for a second, but I think that was me. The Outreach Engagement Committee met last month and discussed all of the awesome work that the outreach team is doing, including a bunch of exciting events throughout the course of the summer, as well as a lot of interesting stuff that's been happening with the podcast.
Thank you. Yeah, it's just been really great to see the outreach, but really the engagement and obviously resulting in more benefits and more applicants. So thank you, team. Dave, the Finance and Audit Committee reports.
Yes, thank you. So at the Finance Committee meeting last month, we discussed the updates to the finance policy that I just went over. We also reviewed the actuarial report from spring that we also went over this morning. And we reviewed the financial statements, which I'm going to do now. I just realized Holly's at this meeting. So Holly, is there anything, I didn't want to steal your thunder. So if there's anything you want to add to that.
Nope, you did just fine. You did just fine. You can go right into the financials. Thank you.
Okay. All right. Just wanted to give you the opportunity. So, but we'll jump right into the financials then. Okay, these financials are for the month and year-end fiscal year ended June 2024. So another fiscal year has come and gone. So for the month of June, our operating expenses were $1.2 million. A little higher than usual, but that's because we paid for 2 months of IT consultants, which amounted to about $142,000. But all the other expenses were typical spending for the month. Payroll and related expenses. We also did make our annual insurance payment for the year, and that was $132,000. That was actually lower than what we paid the prior fiscal year. So we were able to work with our insurance brokers to get competitive rates. So my thanks to them for that. And we were able to get competitive rates because we have a few years of history under our belts now. So that helped us get competitive rates. Other expenses included contact center and outreach. Year to date, our expenses were almost $13.4 million, which resulted us being ahead of budget by about $3.9 million. Income less expenses, slightly worse than budget by $316,000. But remember, as I always like to point out, we only transferred 15 out of the $20 million we had budgeted as an administrative fee because we had enough money in the operating reserves to cover everything. So that's why this number is negative. But it's really because we had enough money in the bank, so to speak. Moving on to bond money. We didn't have any spending in bond money this month, so it was status quo as usual. So for the year, we had spent about over $431,000 of bond funds, less than what we anticipated on spending for the year by over $1.8 million. We didn't get any bond proceeds for the year, but we didn't need them either because we didn't spend as much. And we still have just under $2.4 million of bond funds available to us that we're planning to use in the next fiscal year coming up. Moving on to our contribution activity for the month of June, our net activity was negative $33.3 million. We were just a little worse than budget for the month of June, but that was because we had a bond repayment of $2.1 million that we made in June. Now, we didn't forget about it. We had just budgeted it earlier in the year, so this is really a timing difference. So having said that, the big topic of conversation continues to be benefits being paid. We paid $32.8 million this week. As Erin mentioned before, we've been averaging over $8 million a week in benefit payments. That continues to be the case. For the month of June, it averaged about $8.2 million. We were still $2.7 million ahead of budget. Having said that, our contribution activity for the month of June was just over $600,000. It was $1.8 million less than we expected for the month, but that was offset by our fund recovery activity and our investment income, which was higher than what we budgeted because the rate we're earning is higher. Having said all that, for the month of June, our net activity for the year ended was over $67.6 million, and that was better than budget by $54.7 million, with positive variances in all of the categories. All that net activity resulted in a cash basis for the fund to have just over $566 million, which was the number that Harindra had indicated before in his earlier presentation. No projections for the end of the fiscal year because we're at the end of the fiscal year, and so those are the actual numbers. Just a quick peek into the upcoming month of July. Our operating expenses were $937,000. No big surprises there. Our benefit payments for the month of July were $32.7 million. Again, we're averaging $8.2 million a week. So that that flow of payments has been steady on an average month to month. I will say we just recently did pay out our largest week of benefits about a week or so ago at almost $8.5 million. So the program is being utilized. Last thing I'll say about the month of July is that's the month when the bulk of the quarterly contributions come in for the second quarter. And we collected over $116 million in contributions. We'll have more to say on that, more of an analysis next month when we've had a chance to really do a deeper dive and take a look at that information. So that was what happening for fiscal year ended June 2024, as well as a little peek into July. I welcome any questions at this time regarding the authority's finances. Molly.
Hey, thank you so much for all of this, and I especially appreciate getting the timely updates on the end of the fiscal year, which is always helpful. And just to make sure we're sort of ballparking correctly, especially as we've been talking a lot about fund balance and expenses and benefits, it looks like in very rough terms, the fund is paying out about $33 million a month, and then when we add up all the stuff we're spending money on that's not benefits, so adding up what we're spending on salaries and staff and all that stuff, as well as what we're spending with AFLAC, that's in the just under $3 million a month range. Is that the right ballpark? It's like 1.9 to AFLAC and then $1 million-ish on everything else.
Yeah, roughly, very rough numbers. Yeah, that's fair.
Very rough, the roughest of
Right.
the rough.
The roughest of the rough. Yes. Okay, that's fair. Sure.
I think it's helpful for us to orient us on sort of the relationship between those two numbers, that obviously spending on benefits is and should always be by far the bulk of what we're spending, but we are also spending money on both the contract with AFLAC and all of the other extremely necessary and valuable administrative pieces are happening. So I think it's helpful just to ground us in the rough relationship between those two numbers. So
Oh, okay. No, absolutely fair enough, and thank you for bringing that up. So yeah, the administrative expenses, as you pointed out, have, and as we discussed before with the finance policy, have been relatively fixed. AFLAC right now is very fixed, quite frankly. It's $1.9 million a month, and the administrative expenses can be roughly about $1 million a month, maybe $1.5 million, depending what's going on. So far, so good. The contributions that are coming in, which, as I'll remind everybody, are the only source of funding coming in for the authority that fund these expenses, have been better than budget. And for the year, they were roughly about $450 million. So more than covering the annual expenses for benefits and for administrative expenses. Obviously, as the benefit payments are going up, we are looking at that very closely and just making sure that we're headed in the right direction, which is why we're having conversations now about the contribution rate and whether to keep it steady or not. So we don't get ourselves in a position that we don't want to be later on, because we can only change the contribution rate once a year. So we just want to make sure we make that decision wisely.
Thank you, Mike. I don't see any other hands raised. Does anybody else have anything that they would like to share? Any questions for Mike? Molly, thank you so much. Okay, moving right along. Thanks, Mike. Erin, the CEO report, please.
Sure. Just a couple of quick things. So as we've mentioned, the deadline for the annual report was moved from July 1st to September 1st. This was something we had asked for because we have another report we always submit in September, which is more finance related. And so it just made sense to us to have one report. So we got that legislative change through. It's now a really long report. So it's got all the stuff about who we are, what our claims activity has been, what our outreach activity has been, with all the charts and graphs and details. And then added on to that is information about the actuarial analysis, the finances, the workforce composition. So it's going to be really long. We've been working really hard on it, and now we've kind of shipped the package over to our to Miranda Creative, which helps us with designs. And so we should be getting that pulled together, and it'll get filed for September 1st. Our theme this year is, last year we talked about kind of transitioning from startup to steady state and highlighted some of our process improvements. This year, I wanted to really introduce the authority. Folks know about our wonderful vendor partners, but they don't always know how much we do ourselves. So we wanted to just take a little moment to introduce everybody on the team. So that's what we kind of have done with this year's report. Secondly, we are always getting audited. That's part of our job. So we have outside auditors who audit us every summer, and then the auditors of public accounts tend to also come see us every summer. One of the sources of information that the auditors had asked for was information about you, our board members, and your relationships, basically to make sure that we're not contracting with any of you. The information that they requested is actually information that you all provide in the statements of financial interest. So rather than ask you to provide that information twice, we've worked with the Office of State Ethics, who gave us the public versions of the SFIs. So that excludes any confidential addenda and excludes any information about minor children residing in your households. But it gives the auditors what they need and enables us to prove that, yes, we are fully above board and not engaging in any inappropriate transactions with any of you or any of your contractual entities. So just wanted you to be aware that that was happening. We are also working very hard on the launch of the Community Education Coordinator Initiative. As a result of the RFP that we did, we received several responses. We are now meeting with the vendors to make sure we're all on the same page, finalize the contracts. Once those contracts are signed, we'll be doing a little launch. And then we're going to start getting them all trained up with a training curriculum that extends through the fall, so that the work to have folks who have existing relationships out in the communities across the state, reflecting different groups, populations, geographic areas, and the like will be able to really get out there and provide that technical assistance and really amplify the efforts of our amazing but tiny outreach team. So that's all what we're doing in addition to processing claims and then making sure benefits are getting paid and making sure employers understand their contribution obligations and making sure everybody knows about the legislative changes. So it's been a busy summer. We have not really had a break, but we're all very happy to do the work and engaged. So happy to take any questions. Okay.
Love the hands. Thanks, Erin. Thanks so much. And, you know, kudos to you and the team. It has been a busy summer for all of you. And I'm excited to see the annual report. And please let the minutes reflect that it was not Mike, but Dave who presented the financials. I don't know why I do that. I don't know why. I am going to figure it out.
Right.
But
Michael
thanks,
is
everyone.
intense.
Erin, thanks for the report.
Sure.
Yeah, I know. It's not even, that's not even why. That's a whole other. Okay, so do we have any old business? Any new business? Okay, it is 9:57. I am asking for a motion to adjourn.
My favorite motion to adjourn.
John, you're so busy today. Thank you. Second.
Second.
Okay,
Second.
all in favor?
Aye.
Aye.
Any
Aye.
opposed?
Aye.
Any abstentions? All right, everyone, it is still 9:57. The motion carries. Thank you all. We have an extra hour in our day. Thank you so much. The meeting is adjourned.
Thank
Thank you,
everyone.
everyone.
See you all.
Thanks.